Apple is filthy rich, but you probably already knew that. In 2022, the tech giant brought in just under $400 billion in revenue. That is a lot of money. Looking around at Apple's financial performance, you might have noticed that Apple sits on a lot of cash as well. As of September 2023, the company reportedly had around $166 billion in cash. But where do they store this money? Is it sitting in a vault somewhere on Apple Park? And why do so many analysts claim that all this cash is a problem for Apple? If we take a look at Apple's financial statements, we notice something quite interesting. This here is Apple's Q3 2023 balance sheet, the most recent report as of the time of this writing. Look at this line item named cash and cash equivalents. When we pan over to the number, it says that Apple only has around $28 billion under this line item. So why is this number not $166 billion? Well, when analysts and papers refer to a company's cash, they don't exclusively talk about actual cash. Instead, they refer to a company's assets that can be turned into cash in an instant. And in Apple's case, we have to count these two marketable securities line items as cash. Marketable securities are financial assets that can be easily bought and sold on a public market, such as stocks, bonds, and mutual funds. These securities are listed as assets on a company's balance sheet because they can be easily converted into cash. So, now, when we add Apple's cash and marketable securities, we get $166 billion. This means that technically, Apple has only $28 billion cash deposits in various bank accounts across the world. But why do all these articles claim that Apple's cash is becoming a problem? Being cash rich is generally viewed positively as it equips a company with the flexibility to innovate, expand, and weather economic downturns. This financial strength, often referred to as a fortress balance sheet, has been a hallmark of Apple's appeal to investors. However, the flip side of this asset accumulation is what some analysts see as an inefficient use of capital due to the opportunity cost involved. Opportunity cost, a fundamental economic principle, refers to the potential benefits foregone when choosing one alternative over another. In Apple's context, the cash reserves, if invested in other ventures, could potentially yield higher returns compared to the nominal interest earned currently. Investors advocate for a more efficient utilization of Apple's cash, as this could drive the stock price up. For instance, increased investment in R&D could lead to breakthrough technologies, thereby boosting revenue and consequently the stock price. This not only gratifies investors, but also propels the company into new avenues of growth. Over the years, Apple has been reducing its cash reserves, with a notable drop from $204 billion in 2021 to $166 billion in 2023, primarily through stock buybacks. This strategy, while beneficial in enhancing earnings per share, reignites the debate on whether the funds could be channeled into more growth-oriented avenues. In conclusion, Apple's vast cash reserves reflect financial stability but also spark debates on the capital efficiency. The dilemma lies in whether the funds could be better used in growth-oriented ventures rather than stock buybacks or low-yield holdings. Apple's approach to this financial challenge will continue to be a focal point of interest for some investors and analysts alike.